Hi, everybody. This is Gary Dean, and this is our free sentiment timing weekly video report for Tuesday, February 16th, 2016. So the markets have given us a nice bounce. Hopefully, you guys were able to take advantage of it. And we really should continue to see some strength, and that's what I'm going to kind of go over in tonight's video report. So, one quick note is we're doing a webinar tomorrow. I'm not 100% sure Woody's going to be able to make it. I know he's traveling. He's going to try his best, but if not, we're going to go over understanding sentiment. I'll be doing the webinar if he can't make it, but hopefully he can. Understanding sentiment, understanding technical turn dates, and then combining these technical turn dates and sentiment with regular technical analysis for trade setup. So the registration link is in the email that was with this video. So if you guys are interested, you can you can register and just go through it. It's from 12 o'clock to 1 o'clock. May not take the full hour, but that's the time we're going to be there. So anyway, at sentiment timing, we believe that human beings in the markets are irrational, and there's always going to be an irrational element at work, and that's what creates the market opportunities. Now, we find these irrational elements through Woody Dorsey's proprietary sentiment database, as well as his technical timing indicators, which predict when the markets should be reversing, and then combine that with our regular technical analysis to try to figure out where it is going to reverse. So these dates aren't going to be 100% correct all the time, but what it's really going to do, it's going to give you an idea of whether it's safe to be buying or selling. So we are looking for the low to come in on February 8th. It extended a little longer, but again, did that mean it was safe to short? No, there's too many other things that were looking for a bounce, and I'll go through them tonight, but sentiment was really, really low. We knew we were looking for some type of low, and we had technical divergences, and anybody that was pressing the short side, one thing that I've been saying is you're risking the really the chance of getting caught in a massive short squeeze. And we've seen a pretty good bounce off of that. So the way that really our timing matrix works is that we go off at a time, and those are Woody's technical turn dates. We see how sentiment is registering, because typically when you get too many people on one side of the sentiment gouge, it usually looks for a reversal. And then again, we use price for the technical aspect of things as far as where reversals can take place. So our current market environment is long term. We're in a bear market now. We don't look at long term like most people. We're not looking years down the road. We're looking next 6 to 12 months. That's our long term view. So we're in a bear market, and what that means is, we should see lower lows and lower highs. Intermediate term, typically this is a 3 to 4 week term period that we're looking. Last week, we got a little bit of a bounce off of that. We're looking for the next 1 to 2 weeks for a counter trend rally. And short term, the next day or two, looking for some backing and filling. And what it means is we've had a nice run, so seeing a little bit of a pullback would make sense. And but again, it's within the intermediate term, bullish scenario. So we should see higher highs if we do get that pullback. So with sentiment, what we're looking for is when we see the euphoria and we have a technical turn date to the downside, we're trying to find out where price will reverse down. And then when we start seeing capitulation and everybody throwing in the towel with the markets ever going up, this is your bearish sentiment. And if we're looking for a technical turn date to turn up, we then look for where support is and where things could reverse. So our current our newsletter that we put out today, again, I have to black out the dates because it's not fair to our paying members, but weakness was due to resolve, and then we were looking for strength into, which we already know this date, And then from there, what's going to happen is, things are going to start to get chaotic, and we're looking for a new low, which again, we already have these dates. So we know when the top is supposed to come in, we know when the low is supposed to come in. And that's how we're really going to be using things, and we'll just really keep an eye on, where they could reverse. Are we seeing sentiment getting to bullish extremes? Are we seeing technical divergences? And when we see that, when we're starting to get towards the top, then we're going to be looking to short. And if we see everything reverse and things get bearish at the projected low date, then we are going to be looking to buy. So sentiment, this is our live sentiment here. You can see we had a series of very, very bearish sentiment levels. Doesn't mean that things have to reverse because of the low sentiment, but if you were jumping on the short side and we knew that we had a technical turn date coming, you were asking for trouble, and we've seen what has taken place since then. So if we take a look at our regular charts here, you can see that the S&P is running right into some resistance right here. It would make sense if we get some backing and filling, probably down to the 1860 level, could go a little bit lower. If it pops through it, then we're probably not going to see that break come until we're in the 1920s. So even though I'm anticipating that we could get a little bit of a pullback, it's not something that you want to be shorting, because we're not in a shorting environment right now. You want to be waiting for the pullback to be buying the dips. So ultimately, I believe that we are in an A, B, and then there's going to be a wave C. So this is your bear market, big turn there. And then on a shorter term from the 60-minute, you can see there's still some room to go before we get into these extreme overbought levels right now. So a little bit of a pullback and then up would set up bearish divergences, but you can see at these lows here we had bullish divergences. So again, if you were shorting this drop right here, you were really asking for trouble, because we saw what happened. We've already jumped from 1808 all the way up to the 1895, and this would not be a fun move to be short. So we are at some resistance right here. It would make sense if we get a little bit of a pullback. On the 15-minute chart, you can see we have bearish divergences, and we're also at a 62% retracement. So again, it would suggest that we would get a pullback, but being we've had such an extended move down, often these pullbacks are ignored. So if it continues higher, it continues higher. That's it. What would be the preferred move would be to the downside and then up. And really, what you really want to keep an eye on is the 1863 all the way down to the 1842. So that would be the most sense as far as from a technical view, because of the bearish divergences. Get a little bit of a pullback to make a wave B and then a wave C up, which would finish the that move up. So I closed my trades out today. I made about $1,000, I believe it is, and I switched over. I used to be doing options. I had to get away from it just because if you missed the time part by a day or two, your options were getting absolutely crushed. So I just switched over to trading SSO and SDS, which is the two-time ETFs that follow the spiders. So you can see since I've made the switch, there's been zero losing trades. And I made this switch on January 19th. This was the first trade on it, and I'm up about $3,000. I'm not looking to get rich fast on this. This is a say get rich slowly plan, because it's a lot easier to be able to manage trades in these things. All you do is just wait for sentiment to get at extremes, know when the turn date is coming, and you start layering in. So if you guys are interested, I am giving a free membership to MarketsPath. That's my excuse me, I'm still a little under the weather, but I'm giving a free membership to MarketsPath. This is my other site where I do the video reports and just show you what trades I'm making. So as long as you remain a member of Sentiment Timing, you get this for free. Nightly video reports, morning notes, email trade alerts, and we also have a trade room. And with that, if things have been going exactly as planned as Woody has predicted, it really hasn't been too hard to trade. And if you guys are interested in joining on, we have our promotion going at the top of the page. And with that, until next week, have a great night, and I'll talk to you guys later.